What's up, guys? JJ Fade 23. I'm just gonna make a video about SPY, trading SPY. Someone asked me to make it, so that's what I'm gonna do. Now, I used to trade SPY a lot more than I do lately because, I've always kept SPY off to the side. So I'm always watching SPY when I'm entering large cap trades. I'm always trying to if I'm looking at a swing long or a day trade for a large cap, I want to make sure I think SPY is going to go in that direction too, right? So if I think SPY is a short today, I'm not going to try to long something. That's just not how I trade large caps. So I usually have it off to my side screen, and I've had it on my side screen for so long. And in the morning, my main thing is small cap shorting, right? I usually trade large caps, sometimes at the open if there's not any good small caps, or I'll trade two things maybe at the open, a great small cap and a large cap. For the most part, I like to let the opening price action, whipsaw back and forth. Let all the orders get filled, and then within 15 minutes, see which way stocks start to trend, and then I just go to my playbook. Now, SPY, a lot of times I miss my great setups because I'm looking at the room, I'm looking at so many screens, I'm looking at this. I miss my entries. Like the other day, we had the secret short on SPY, right? What I call in the room a secret short is a stock that is either up, extended off the daily 4, like we always talk about, right? See how SPY up here was decent off the 4. If you look, like every stock, I always tell you guys, come off the 4, comes back to it, the blue line. Come off the 4, comes back to it, right? Come off the 4, comes back to it, comes back to it, comes back to it, comes back to it. Most stocks can only stay off the daily for 1 to 2 days. They usually come off and come back the next day unless there's some kind of real freak. Anyways, when you have a gap off it, so price action's opening up here, you have a gap off it and even farther off the 8. That's two short-term EMAs that price will come back to quite often. So basically, up here, I'm like, okay, I'm watching SPY now. I don't want to look at SPY's breaking out, okay? Guys, this is not the setup I'm teaching you, but I just want to show you this real quick. Up here, SPY is holding a breakout, right? It broke this level. I'm not trying to just short it up here. So I need to see something that makes me want to short it. So what is that? So let me mark this breakout level, okay? And you guys should all be aware of when this happens. All right? That's the breakout level. So if we're over that level, we're super bullish. I'm not going to try to short it. But look what happens. SPY on this day does a fake breakout. We gap up and we fail back down. Now, yes, we came back to this trend line, which can be a little contradicting because we might be able to go up. But what I did was say, okay, we failed the breakout. That's a short trigger in itself to me. But now we dropped 575 all the way down to 570. That's a $5 drop. That shows me that supply came in. A decent amount of supply that we were able to go through. Oh, the other thing, guys, too. Sorry, I changed my charts for a sec to do this. So, guys, remember, when the stock drops past the 10-minute 50, that means it made a pretty big drop, enough to say that was a decent amount of supply. So, look. So, right here, SPY dropped. The 10-minute 50 is the red line. SPY gapped up, dropped all the way down past the red line. So now when I see that, plus I have a short trigger, which is a fake breakout over this high, now I look for the lower high short. So I know we dropped enough to show me that supply came in. So I'll mark off where the supply came in, right? I'll use that candle up there. Sometimes if the candle's too big, I'll just use maybe like this, like that, like right here, These two candles tips. I don't like to make it too big because the risk gets too big. I'd rather just wait. But I'll use the supply zone like that, and then I'll also put my FIBS on. And I want to see it at least over the 61 fib. And if it dropped too far and there's a lot of dollars back up, then I'll want it to see it to the 78% fib. Now, as you can see, we talked about this in pre-market Friday. If SPY comes back up to the 78% fib and gives me a trigger or a close enough risk reward that I can risk off this, I'm going to short it. I missed the entry because I was watching too many things and talking in the chat and everything. But, right here, you guys, this pops up, rejects the 78% fib. I would have shorted that right there, put my stop up here, and then covered into this trend line and now see if we can break down. Now, going forward, if we lose this trend line, it could start to pull back more. But anyways, a secret setup isn't a setup that I just trade on SPY. It's something that a setup that I created in the room and a long time ago that I always trade in large caps. But so the main way that I trade SPY is the same ways I trade everything else. All right. I use the 8, the 21, the 34, and the 50. Now, guys, when it comes to EMA setups, I use EMAs the most, Fibonacci's, and key levels and triggers. That's my whole systems are built around that. So when it comes to using the EMAs, I have a few different setups, all right? One of them I call strong move up, flag off the 8, all right? So that is this. When the stock makes a strong move up and it comes off the brown line, which is the daily 8, I look for the flag off the 8. And I will trade the first 2 flags off the 8. I won't keep trading it because they're bound to fail eventually. But the first one is my favorite. Strong move up, flag off the 8. So that is right here. That would have been a perfect entry, especially when you got this red candle, and then it gaps up, and then it dips down to give you a risk reward. Now, I will go down to a smaller time frame and look for a good entry, knowing where the 8 was. So a lot of times, whenever you have this, right? Look, I'll show you a few examples, all right? Strong move up, flag off the 8. That's the first one. We made another strong move up. We flagged off the 8 again right here. Now, I probably wouldn't trade the third one, but after it breaks the 8, I look for the 21.34 together. And then what does it do? It comes right back to the 21.34. These things are so strong on every time frame. The hourly, the daily, it doesn't matter. The 8, 21, and 34 are my favorite EMAs. They're crazy. As you can see, right, again, it comes back to the 21. It comes back to the 21. It comes back almost to the 21. Comes back to the 21. Comes back to the 21. Comes back to the 21. Guys, pay attention to where the stock likes to come back to. I don't know if algos cause this to get bought up at the same place every time or what, but when I notice that, I start to look for entries on a smaller time frame. All right? So, look, it did it over here too, 21.34. If you use these as like a band together, I mean, sometimes the risk is too big, but what you do is, right, I'll show you over here. Watch. What you do is look for, once you know where the stock keeps getting bought up, let me delete all this off here, for example. All right. So, all right, for example, look at the 4 right here, okay? The daily 4, look, touch, little below, touch. All these times touching. So you could say, okay, this thing getting bought up every time it gets to that. So then what you do is I have not on this, it's not on this chart, but when I go on my 10-minute chart on my normal setup, it'll show me where the daily 4 is. Or what you can do is go to like a different time, like say, go to the daily 4, then go to the hourly chart, see where that is. Now look, all right? Switch to the hourly chart and say, look, every time SPY comes back to the hourly 21.34, it's getting bought up. Look it. Right between the hourly 21.34, it's getting bought up. 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 You use that. So look at this. You could use the 34 as your stop. When it comes down near there, you get in. You get in. You get in. You get in. And how do you do that? Look over here. Look. Comes back. Strong move down. Flags off the 8. Then it goes to the 21. Goes to the 21. But you're not just going to guess. You're not just going to guess, right? You're going to say, okay, it's coming back to the 34. So let me mark these so I can show you. Watch. Once you have a higher time frame that is showing you, okay, something's happening on this higher time frame, you go down to a lower time frame and you look for a bullish setup at that area. All right? So I'll show you, for example. All right? So now here we go. All right? So now we know. Let's just draw this trend line and pretend that it's not just a trend line. It's also the hourly 34, and it's also the it's also the daily 4. So now, guys, look. You know that the right around here is the area that it keeps getting bought up. Look, see where I have the circles? And look at where you're getting. Hammer candle, long, stop below. Hammer candle, bottom tails, long, stop below. This one was only a little tiny one, but reclaims. And maybe if you go down to a smaller time frame, watch. Down to the 5-minute. It still gave you a little bottom tail, but not much. But look at this one, bottom tail. These are showing you this is how you use a bigger time frame with a smaller time frame. So the bigger time frame to tell you where to maybe want to buy, and then the smaller time frame to show you the candlesticks you want to see. Either bottom tails or bullish engulfing candles. I like bottom tails and I like fake breakdowns. My favorite ones would be like this. I like when you get like bottom tails, but you also get fake breakdown right here. Fake breakdown is the same as fake breakout. We fake breakdown and then reclaim and go. All right, right here. You're at the level. So this comes down, it comes down again. It does a fake breakdown. You long, you put your stop below. I like fake breakdowns the best. Sometimes if we don't get it, we just get a big bottom tail like that, or 2 bottom tails, I'll buy it. But this is like how I use the bigger time frame EMAs with smaller time frame to get in. Also, another thing that I do is just go on the daily chart. The trend is up, right? The trend is up. Okay. Go on the hourly chart. The trend is up, right? So now, guys, I'm looking for gap ups that show me demand. All right. So let's go to the 10-minute chart, which is what I mostly trade off of, using the 10-minute EMAs as a guide. But let's go back now. Let's go back maybe like 90 days or whatever. 60 days, 90 days, whatever. We'll go back. Okay. So now, two ways that I spot demand on a bigger time frame. All right. We'll go back. Okay. So number one, wherever you have these huge candles, big buy candles, you know, retail traders can't move stocks like this, big buy candles like that. So wherever those start from, I'll try to mark off like demand, right? So I'll put a box like this around that area because that's where, boom, big buy orders came in. The other thing that I do, guys, wherever a stock gaps up from, wherever you gap up from, that shows demand. That's what caused the gap up. So I'll mark the area near the gap up. A couple candles around there, you know, where the gap up. So if it gaps up, comes back to there, I will long it with my stop below. If it gives me candles. Like this one, I probably wouldn't have longed. Yes, it touched that perfect, but it didn't really give me a great entry candle, like a bottom tail or anything. Guys, remember, look at this one, right? You mark this zone, it comes down, gives you a boom, fake breakdown, first of all. This is a fake breakdown, long trigger, right here. Plus a nice wick down bottom tail. That's a long. This one didn't really give you much of an entry. But guys, remember, you can build your system how you want. You can say, okay, it's not just about marking zones good, because everybody marks different zones. But guess what? You can say, okay, I'm going to mark this zone, but I'm only going to trade if we get a triple bottom here, or a double bottom here, or a fake breakdown here. You can build that however you want to make it more stronger, right? So now, same idea. Right here, this is a gap up, big gap up. I don't think price ever came back to here, but I would mark this like this. And then if price came back down to here this day, whoop, I would long it if it gave me my trigger candles. All right? So now the other thing is, guys, when the 10-minute EMAs cross to the downside, if you have room, not just any time, but if you have room off the short-term daily EMAs and you're extended off the short-term, well, all right, let's go. Let's show you. You don't want to be short and right on top of daily EMAs and right on top of hourly short-term EMAs. But if you're extended off them, right, look, this is how price action moves. It goes away from the EMAs, it comes back to it. Goes away from it, comes back to it. Goes away from them, comes back to them. So if you're extended away, so here's a gap up right here, what I was just talking about. We gapped up from here. We're extended from the EMAs to the downside. We marked this level off. This is the hourly chart. It doesn't matter. Good for swings. You get the bottom tail. So you have the demand zone where we gapped up from. And then you get the bottom tail back in demand zone, long. All right? Now, I was trying to show you something real quick. Where I marked that. Where did I mark that? All right, right here. So this is what we were just talking about right here. But see this, guys? We're not that extended off the hourly EMAs. We're sitting right on them. So I wouldn't short that. So let's go back to the 10-minute chart. I like to call this, it's really just supply and demand, but I like to call it show me the level and come back to it. Show me the level and come back to it. Okay? So what you're doing, guys, now here's a good example of a short one. We gap down from here, right? We gap down calling supply. Now I'd have to make sure where we are on the daily chart and hourly chart because I don't want to be shorting right into like a very key daily EMA or something. But show me the level means supply came in. That's why we gap down and we come back to it. And also, guys, you'd be surprised, no matter what the daily and hourly chart show, when the 10-minute EMAs with the pre-market data off are going down, look at this. I don't care how far back you go, the 10-minute EMAs are one of my favorite things, all right? When the 10-minute EMAs are going down, the stock's going down. When the 10-minute EMAs are going up, the stock's going up, all right? Now, look. These things are so powerful, it's crazy. You gotta use the 10-minute 2134 with the pre-market data off. When you have the pre-market data on, you get a lot of whipsaw back and forth. These things work so good. Look, they cross to the downside now. Look, they're going down now. Now the stock goes down, right? Now over here, they start to go back up. It goes up a little. They cross back down. It goes down. You can day trade off this crazy. And when they're going sideways, guys, guess what? That means the stock's probably in a range. Look, they're going sideways tangled. Look at the range you could have shorted. Look at the range you could have longed. Look, they're going sideways tangled. Look at the range you could have shorted. Look, you don't want to short this tight of a range, but you get what I'm saying. When they're going sideways, the stock's going sideways. When they start to curl up, the stock goes up. When they start to curl down, the stock curls down. So now, if you combine that, look right here, the stock is going down. Yes, they did curl up right here, and we gapped up. So I don't know that I would have taken that because yes, the 10-minute EMAs crossed up. We just gapped up from here. I might not have taken that, but that is a first. Show me the level and come back to it. I prefer it to be like this. Okay, I prefer it to be like this. 10-minute EMAs are going down. Now we mark this level. 10-minute EMAs are going down. We mark that level as a supply zone, and then we gap down. We pop back up to this level, or we pack whatever. We either gap down and pop back up to it here, while the 10-minute EMAs are still going down for the short, or we pop back up to it here. Whatever. You can also use the 10-minute EMAs as a place to short in themselves, which I do that a lot. We start the downtrend. Look, this is what we were just talking about. Strong move down, flag off the 8, then we go to the 21.34, right? Back to the 21, back to the 34. If you use these as a band, you know, sometimes I'll take the short if I get a trigger and I'll jam my stop. Other times I'll take the short with my stop a little above the 50. All right, so I'll short at the 21 with my stop over the 34 or the 50. If I get a fake breakout candle like that, maybe I'll do it, but it depends. You know, it also depends where we are on the daily and hourly chart, like I'm saying. I don't want to be shorting right on top of like the daily 21 or the hourly 21. All right. So here's another example of supply. We gap down from here. We gap down from right here, just like up there. We gap down. So we marked out supply zone. And then we come back to it. And this one's kind of like that one where it was like we're gapping up right into it. But a lot of times you'll see, guys, institutional money moves the market that big, so maybe they want to backfill orders, right? They move, it comes back, and they still have more sells there to be had. So pay attention to those levels. All right. So when it gaps up and doesn't come back, you know, it's also, guys, experience, right? So let's say I mark this level, right? Let's say this is what screen time and trading for a long time does. Let's say I mark this level right here, but I also know this is a breakout right here. All right. Now, let's say I really want my best trade to be right here because that's going to give me super tight risk reward off the actual place that it gapped up from. But then what happens is the market opens and I'm watching it. I get this candle right here that comes almost to this level and then wicks back. Then I'll take it with my stop below, even though I really wanted it down here. But it showed me it held long enough. And that's also a strong move up, flag off the 8. Boom. Right? And then what? Again, comes back to the 21, back to the 34. A lot of times this is how they move in the trend. Comes back to the 8, come back to the 21, come back to the 34, and then it'll start to like ride on one of them. All right? So same thing again. This one didn't actually come back to the 8, but strong move up. It kind of was so strong it didn't really touch the 8. But look, eventually comes back to the 21 and 34, and then goes again. So these 10-minute EMAs are ridiculously strong. Look at how they ride up them. And then look, guess what happens right here that we were talking about earlier. You get a fake breakout. First of all, you extend off the 10-minute EMAs, and then you come back to them. And then you get a fake breakout right here, and we drop below the 50. Okay, so that shows me we get a fake breakout. We drop below the 50. If we come back up to here, I might be able to get a decent short on. So I put my FIBS on. We come back up to the 78 cent. We get a fake breakout. Boom, short. Take it back to the 10-minute EMAs again. And then if it doesn't fully break down, once I'm in the money a decent amount, I'll put my stop at even sometimes. Depending where we are also on the daily chart, you guys. A lot of this stuff has to line up on the daily chart too. I don't know how people trade off just like how you just trade off like a 10-minute chart without knowing where you are on the daily chart or the hourly chart. So here's another good example. We have a huge drop, you guys. That shows supply came in. Mark off the supply zone. Now, what would you want to see when we come back up to this supply zone? Well, first of all, I'd want to be extended off the 10-minute EMAs because I don't want to short right on top of the 10-minute EMAs, right? Because I know they're so strong. Just like here, they're holding. Just like here, they're going down. Now the stock's going up. So I'm not going to short a supply like this right here. I wouldn't short this supply. Even though we had a huge drop right here, I wouldn't short this supply zone right here. Why not? Because look how close we are to the 10-minute EMAs, and we just gapped up. But now, boom, now we extend way off. We get a huge rejection right here, candle. Short. Put your stop above the supply zone. Take it back to the 10-minute EMAs. If it breaks the 10-minute EMAs, take it back to the hourly EMAs. If it breaks that, take it back to the next daily EMA, either 8, 21, 34, whatever's next. Again, we have a right here. Now we come back up, you guys. Look what we get right here. This is a fake breakout. We're above the supply zone, but this is a fake breakout trigger right here. Right here. We gap up, curl off the 10-minute EMAs. By the way, look, 10-minute 21. Look, strong move up, flag off the 8. It whips out, but then it comes back to the 21. Comes back to the 21. Now we get a fake breakout. Whenever you get a fake breakout, that usually equals a good short trigger, just like a fake breakdown right here. So we come down, guys. We drop below the 50. Now I would have wanted to put my fibs on and get near the 61 to 78% fib, which honestly it didn't bounce that high. It never really bounced that high. Well, right here you could have got 61 fib. You kind of had a lot of risk, but it was still in lower high position, and then it gave you a decent trade. And also remember, guys, look, because the EMAs are tangled, see how we stayed in this range pretty good? And we actually, guys, so there's a little nuanced tip, all right? Let's say we have the supply come in, the 10-minute EMAs cross to the downside. Now I want a spike back to lower high position, which is anywhere above the 61 fib. Say I don't think this is high enough, right? 561.86, I don't want to risk $4 or $3. So I have to wait for a trigger. Well, what is a trigger? A trigger is a fake breakout. So right here now we have this high. We have that high right there. And once we break over that high and fall back below, that's my trigger. Now I can short it with my stop just above that trigger. So that would have been beautiful. And then once we start trending down, guess what? Strong move down, flag off the 8. Boom. Once it breaks the 8, it comes back to the 21. Boom. Guys, use these 10-minute EMAs. They're literally insane. So let's delete this off now. Clear drawing set. Okay. Guess what? Guess what happened here? 10-minute EMAs crossed down. Huge supply came in. All right? Huge supply came in. So now what? We put our fibs on again. Guys, I like this setup even better than supply and demand. Once I see a huge drop and the 10-minute EMAs cross down, it breaks to 50, I put my fibs on and wait for the lower high. Why do the fibs work so good? Because anyone who longs it down here is probably going to sell as it gets near the highs. And anyone who wants to short it up near this high so they have a good risk reward, because this is the true place that it failed. If you put your stop here, that's not the true place it failed. If you put your stop here, that's not the true place it failed. You want to have your stop at the true place it failed. That means your stop will be here. The true place is stop going down. Your stop will be here. Your stop will be here. Right? The true place before it bounced. So 10-minute EMAs cross down. We pop back up to lower high position. We got multiple topping tails showing you that this is a good level to take the short. Take it back down to demand. And then if you cover some there, see if it breaks. If not, you can put your stop at even. Or, guys, look at this. If you get the top and tail. Say you enter right here on the top and tails. Okay, look how much, you put this, your stop goes right here, above. You entered right here. Your stop goes up here. That's 1 hour. That's 2 hour. 3. That's 5 hours down to here. A little more than 5 hours. All right? Now guess what again, you guys? Guess what happens? We come back up to supply, to resistance. Look what that is. That's a fake breakout trigger again. You can take these triggers right away on the fake breakouts. Boom, fake breakout. As soon as it falls back below this high, short. And then guess what? Strong move down, flag off the 8. Right? Strong move down, flag off the 8. It comes back, not quite to the 21, but then it comes back to it goes through the 21.34 here, but that's why I like to use these together sometimes. Or wait for a good fake breakout or very obvious. See how this is grinding right here? Making higher highs and higher lows. You don't really get a trigger candle, but you do get a trend break. All right, so if you want to wait, I also consider trend breaks a trigger. So it comes back to the 10-minute EMAs. You break trend, short. So, all right, I don't want to get too carried away, but now, all right, let's go back over here. Now, see, right here is a good example. We gapped up, but this one is like the one before. I would have wanted to come down into the zone a little lower to have good risk reward. But guys, this is also a version of the secret setup, the long version. So what that means is the 10-minute EMAs cross to the upside. Do we stop making a high? Well, we had a high right here. We had a high right here. So we made a higher high right here. So guys, when stocks are going down, they make lower lows, lower highs. lower lows, lower highs. Now we made a higher high. Now we want to buy the higher low, but the problem is this didn't come back, I don't think, to the 61 fib. It only came back to the 50 fib, so I would have wanted to come down to here. And it would have had this demand zone and higher low position. That would have been great. All right, so this is another kind of tricky one, right? You have a gap up. You could have got a little decent trade off of here, but not for much. It would have failed. And then now this shows you big candle right here, right? Big sell candles came in from right here. So big sell candles came in from right here, and you came up. It didn't give you a reason to short in supply right here. You got a bearish engulfing candle right here, but not a very big one. You might have taken that trade and maybe choked it if you got stopped out. But once it falls back below this level and you get this candle, then it's really safe to say that it's gonna, it's probably gonna break down because you got a fake breakout and then a massive bearish engulfing candle. But guys, remember, the best way to do all this is to have it lined up with daily chart and hourly chart if you're swing trading. I usually don't even trade SPY if it's not like in a perfect position on the daily chart, right? Because I want to know we're at a very key level, or I want to know that I don't think there's a lot of edge in trading SPY randomly every day. I don't. I honestly don't. I think you have certain specific times where you have good edge and you're at a key level, or you're extended off the EMAs, or you're sitting right on them. Like, let's go back to like some of the trades we took in the room. Right here, we had the strong move down, flag off the 8. We nailed this short, guys. This is a strong move down. 1, 2, 3 days up to the 8 right here. We destroyed that short back down to higher low position, and look what it does. It goes up, comes right back down to higher low position, and then makes a higher low. Watch. Boop, right back to the 61 fib. Boom. So that was our target in the room. We shorted it, we took it back to the 61 fib, and then it starts to go. Now when it starts to go, I'm looking for resetups, right? I'm looking for new setups, either tucked against my EMAs or back at pullbacks of support, or triggers like this, right? I probably won't even trade. I'm not going to trade an uptrend when it's that far off the 8, all right? Right there, I might have took a day trade when it went like this, under, reclaim, over, and then longed it. Now it comes down. We have a huge bearish engulfing candle, another flag off the 8 right here, by the way, guys. Strong move down, flag off the 8 right here. It dumps. Now I'm just watching. I think we were like, oh, this could come all the way back down here now. I'm just waiting. Once we get these bottom tails, now it's like, okay, we're going back up. Start to long again. Then you're looking for intraday setups, especially over the previous day high, stuff like that. It's so hard to like go through the whole system is built around the same things. The daily EMAs, the hourly EMAs, and the 10-minute EMAs, and even the 5-minute intraday. I use the same EMAs, the same setups, just different time frames for different setups. It's hard to go over them all in a video, and then combined with FIBS because they give me the best risk reward places to enter, right? I'll take you a little example of like 5-minute chart just for intraday setups. Now 5-minute chart, you guys, I use the pre-market data on, but it's the same setups, okay? Guys, look at the 21, look at the 21, look at the 2134. You have to use these EMAs, you guys. I don't care what anyone says. Look at these. The strong move down, flag off the 8. If this popped back up to here a little closer, I would have smacked at it. And then I expect it, if it breaks the 8, to go to the 2134. Boom. Back to the 21. Boom. Back to the 34. Boom. Right? It's the same shit that happens every day. Yesterday, I think we traded, what was it? What was it? What day was it? I don't think I traded SPY yesterday, actually, but on Friday. But, shit, I'm trying to think. Here's another decent setup right here. Look, pre-market high, you guys. Pre-market high with a fake breakout and a massive top and tail. That's a good setup. You get this kind of hammer candle with a big top and tail candle on a fake breakout with a pre-market high. That's a decent setup, depending where you are on the daily chart. Let's look at the 10-minute chart first. That was a great one because, again, we had a huge drop, and now we're back in lower high position. Oh, that was the secret setup that I missed. That's right. Right? So we came up to the 78% fib. We have not only had a top of tail, we had a fake breakout of the pre-market high. You have to learn all these things. You have to be able to think all these things, you know, like when you're trading. So, and then once we start to dump, look, we start to dump. Remember, we use these like as a band almost, right? We start to dump, strong move down, flag off the 8. You can scalp flags off the 8 with these top and tails all day long, and you get the tightest risk reward. You don't want to do it really right at the open because there's so much whipsaw, but once it picks a direction, like it tries to do a fake move up and starts trending down, guys, look at this. This kind of setup, for example, right? You're watching this. This goes like this, boom, hits the 8 and starts to wig off it. Bam, you short it real quick. 54, risking 10 cents. You can get 1, 2, 3, 4, 5, 6. I've gotten 20-yard trades on these. On Tesla, guys, look at this. Trade we took in the room. This stock, okay? This stock, I want to show you the daily chart first, all right? First of all, look at us flagging on the 8 right here, right? Now, I didn't take this trade right here on the 8s because we getting all these top and tails. But once we broke out, I knew shorts were trapped because these top and tail. Everybody who's shorting here is going to get jammed up. So right here, 236, all right? On this first super bullish day at 236 breakout, let's delete all these real quick. I'm going to give you a perfect example of a fucking 30-yard trade on a strong move up flag off the 8 intraday. So first of all, you're looking at a flag on the daily chart, and you know if you break over this level, this thing could fly because of the fact that we had big red days before that, bearish short trap days, right? Stuff candles, top and tails. So we know in the room, if we break over 236, this thing could fly. Now look what we did. All right? Check this out, you guys. This day right here, this thing breaks over. Where is it? Where was it? Right here. Look at this, you guys. We break over 236, and look at the strong move up, flag off the 8. Boom. Came up. We nailed it right here. Bam. Got long right here. Stop under here. Got long. 236, like I think it was like 35 with my stop below 236. Guys, and that's 35 cents. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We held that for 3 days. 3 days in the room with with like a 30-cent stop. With like a 30-cent stop. Sorry, I was watching my parents' dog. They just came together. Hey, I'm on the mic. So that breakout right there. This day when we knew it was breaking out, we looked for an intraday setup. Strong move up. Hold on. So I'm using the intraday setup combined with the daily chart setup to get a tiny risk, and look how far it goes. Guys, that thing goes, that thing went, what is it, 56? That thing went almost $30, and you had literally a 30-cent risk entry. Just with a simple setup. Strong move up. You know we got to break out on the daily chart. Strong move up, flag off the 8. You get the bottom tails, you enter. Boom. Put your stop right below those bottom tails. And then you take that thing, because you know on a breakout could have continuation, especially on Tesla. Could have 2 or 3 days. You hold it. You have tight risk. Let's say you had 50-cent risk. Let's say you waited for a little to start to go back up. You shorted it. Even if you had, I don't care if you had $1 risk, guys. You could have had a 20-something hour trade easily. A lot of people in the room smashed that because it was just a perfect setup. And then it gave you another flag off the 8 right here. Strong move up, flag off the 8. Another strong move up. Now we're flagging on the 8. I love the 5-minute 8. It gives me the tightest risk-reward trades ever, especially when you get a little under-over like this. Either big bottom tails like that or under-over reclaim. I love it. And then guess what? What do you know after that, guys? Back to the 5-minute 21. And then guess what? Want to know where it went after that? I guarantee you back to the 10-minute 21 with the pre-market data off. So let's go look. Where were we at? Well, no, it broke at that time. But I bet you went back to the hourly 21 if it broke the 10-minute EMAs. Let's go look. Whoa, look at that. Hourly 21 right there. So do you see how it works? You get the daily chart set up, strong move up, flag off the 5-minute 8. If it breaks the 5-minute 8, you're looking for an entry near the 10-minute 21. Guess what? If it just blows through the 10-minute 21 like this, it didn't give, well, it did bounce off the 10-minute 21 right there, you guys, but it was near the end of the day and it failed the breakout. Once it breaks the 10-minute EMAs, now the next progression down the line is the hourly EMAs. So we look for the hourly 21, and there it is. And guess what? It holds the hourly 21 once, holds the hourly 21 twice, just like SPY did. Because once we see where buyers come in, once we saw where the buyers came in last time, now we know, okay, we'll look for that same area again, right? So this is when stocks trend, these EMAs are just amazing, especially when they're fanned out like this, super bullish. So, and then also, guys, I'm trying to line that up again with like what we'll look on the daily chart, right? So we come back, look at strong move up, we come back to the 4 because we can't stay off the 4 long. Boom, it comes up, dips back to the 4, goes up, comes back to the 4. I'm watching that intraday. I'm saying, okay, I can long this off the 4. Look at it, it keeps holding the 4 the whole way up. This big red day 2 days ago, look at that big dump. Now on my real setup, this would have a dotted line right here. It would look like this. There would be a baby blue dotted line. It would look like this. It would tell me that that's where the 4 is, even when I'm on the 10-minute chart. So I would know the 4 is right there. All right, so I could either, another trick that I use with these, let's say I'm looking at the 10-minute chart, I know the 4 is right there. I also will use Heikinachis. All right, sometimes if I don't get any real good trigger candles, like bottom tails or fake breakdowns, I'll just wait till I get a green Heikinachi near the 4, and then I'll go long with my stop below, and then take it back up. Heikinachi, guys, Heikinachi is a lot of people don't use those, but if you line those up with your levels, right? If you line those up with your levels, look at how smooth these can be sometimes. All right, hourly 21, you're waiting, you get a green hike, go long. Look, hourly 21, you're waiting, get a green hike, go long. All right, look at how smooth these look sometimes. Right, you're not going to short, and then you get a red hike, boom. It's just even on the daily chart, sometimes they can help you a lot, smooth out your trading. All right, so if you're looking for levels, like, you know, however you trade or whatever, let's say you're looking. All right, here's a good example right here. All right, this is all red. Now we're coming back to the demand zone. Wait, coming back. Well, this one, guys, we don't want to use the. What was I just gonna say? Fuck. Sorry, guys. The dogs are freaking squealing now, trying to get in my room. Hold on. Guys, play around with the Heikinachis. I forget what I was gonna say, but play around with the Heikinachis, and you'll see a lot of times you get, you know, when they come back to your levels, they'll give you like. Oh, that's what I was going to say. Okay, so we come back to the EMAs, right? Now we're looking, okay? We see we have a perfect trend line here, right? We see we have a perfect trend line. At the same time this trend line breaks, you get a red Heikinachi right at the daily 34, right? These EMAs, guys, the way I look at it is the EMAs give you a place to have they give you like a place, a constant thing that you can have for like a judge. It's kind of like, a good analogy is like, I don't know if anyone's ever played basketball, but if you go shoot a basketball at a tiny gym where the backboard's close to the wall and the stands are behind you, it seems 10 times easier than shooting at like a court that is a massive stadium with a glass backboard where there's no friggin' depth perception to where you're shooting. The rim seems like a little tiny circle in the middle of nowhere. And that's how I look at this too. These seem like a little tiny candles in the middle of nowhere unless I have depth perception of the EMAs, right? They give me the judge, like right here. Look at this. Maybe I'm not long in Tesla at all right here, but do you think I didn't long that right there? Fuck yeah, I longed it. Everybody in the room longed it. Look how perfect this is. This is now the EMAs are tangled. Now they start to curl up. Look at this. This is a perfect flag pattern, an absolutely perfect flag pattern right on top of the daily EMAs, which gives me a place to risk off of, and then I just wait for the green hike and for the trim break, long, boom. It's just, guys, these are the specific times, and also that was in a squeeze, by the way, which I don't use all that much, but added thing. These are the specific times that you should only be trading when you get a perfect setup that it's so obvious that you're like, oh my God, this is perfect. I have super tight risk reward, right? The setups, like on the daily chart, I trade off the flags off the EMAs, yes. Flags off the 8, yes. Flags off the EMAs, yes. Flags off the EMAs, yes. I don't trade a lot of other crap unless we get a really big extension down to a key level and we're extended from the EMAs and then we get a green hike, something like that sometimes. But how I do that is I only trade off support levels that the stocks bounced far off last time. So let me show you an example of that real quick. Let's say, for example, if this came back down to here, right? It didn't come low enough. Well, let's say it did. let's say it came back down to the support level. I would say, okay, last time it was here, we bounced 190% from that level. Did you see that? Look, guys. Last time we were here, see that? We bounced 190% from that level. That means this level is strong as fuck to me. That's how I judge support and resistance. So if it came back to it again, I'd long it. Now, say for example, right here, right? Is that a big resistance? We dropped 32%. That's pretty big, but still not as big as some of these. Look right here. This resistance right here. We dropped from, we'll call it this one, bounce back up. We'll call it this whole thing, this whole area right here, right? We dropped from there, we dropped, oh shit, I can't see. Hold on. So from here, we dropped 43%. So yeah, would I short that when we came back? Well, number one, guys, look, we broke the 50 on the weekly chart. That means we dropped far enough. Plus, we dropped 43%. So if it bounced back up to lower high position, I would short it. Because lower high position gives me the best risk reward. And here we go, 78% fib. Even got a big top and tail for the short. So I see how I'm doing the same things always on different time frames. Same things always on different time frames. We have a flag right here on the weekly EMAs. Green hike, long. Right? Flag on the weekly 21. Green hike, long. Big drop, supply, lower high position. Boom. Demand. Look at this. Guys. Would I long this from this demand zone right here? You bet your ass. Why? Well, I'll show you. Because last time we went from here to up to there, which is 128%. So if we come back to here, maybe we're not going to bounce 128%, but if we come back to here, I get some bottom tails, and then we get a green hike. Hell yeah, because we could bounce how far? We might be able to bounce even back up to low high position again, but that bounced 50%. Why? Because this showed you how strong it was right here. It bounced 100 and something percent. So yeah, exactly. Now look at this supply zone. How far did we drop from here? We dropped 68%. That's pretty fucking good. So I'd mark that level and say, hey, we dropped 68% from there. Mark that supply zone. Now, if we get a trigger in that, either a trigger or red Hikinashi. So we got, look at that, fake breakout trigger right here. That's a fake breakout trigger into this supply zone that we dropped a mile from last time. And then we got the red hikes also. So if you didn't want to take the fake breakout, take the red hikes. But all guys, be aware. Waiting for the hikes to change colors is going to give you much more risk than a trigger. If you got this kind of top of tail, it comes back down, short it right there, boom. 283, you might be risking $20, but guess what? That thing went down to fucking $140, $150. Who cares? It's all about it's all about taking it back to the demand zone, how far away it is, right? So can I short this supply zone? Well, you have to be careful because the EMAs, you have a breakout level here. You have a breakout, this is a cup and a handle, so that's a breakout retest right here. Breakout retest plus the EMAs are starting to curl up, so you have to be careful, but the big demand zone is back down here, so if you want to target that, well, then the risk reward would have been good, you know. Or guys, this is a weekly candle. You go to a small time frame, look for a trigger inside this zone. Watch. First, go to the daily chart. So now, look, guys. Now you might have. Well, you wouldn't have known that was red until it closed. So let's get rid of the hikes for a sec, or we go to the hourly chart. All right, where are we here? I gotta go back too far, I think. Too far, too far, too far, too far. Wait, where is that? Oh, I can't go back that far. But anyway, the point is, guys, see, let's say this is the supply zone. You might get a quicker entry on a smaller time frame. You get that kind of stuff, you know, boom, you short, but you stop right above. Now, you know, that's what I mean about lining up the bigger time frames with the lower time frame entries. That's basically, and guys, again, just like we were talking about on SPY, look, spot out where the stock is going down to. Look, the hourly 50 on this one. And then look how many times it gives you a chance to get in. All right? Or just wait for the very best setups like the flags right on top of the EMAs. So I don't know how this video got so freaking crazy talking about so much other stuff. But basically, guys, for SPY, for anything, I'm trading flags right on top of EMAs, daily chart flags lined up with intraday setups, 10-minute EMAs, hourly EMAs, and daily chart, weekly chart. Also, supply and demand, show me the level and come back to it, right? Big drops. I know they're big drops because of how big the buy and sell candles were, plus the percent that they dropped. And then if it's then I look for it to come back up to that level, as long as it's either extended away from the short-term EMAs or they're going this direction that I want to short, right? So if you want to short away from, like guys, if you want to short when the 10-minute EMAs are going up, you have to be far off them. Otherwise, you want to be short when they're going down. Same with all the time frames, right? If you want to short Tesla, well, guess what? You better be extended off the 4 and the 8, or else you're just going to get squeezed. Or if you want a long Tesla when it's going down, you got to be extended off the 4 and 8. Guys, like I always say, comes off the 4, comes back to it. Comes off, well, that didn't really come off at 5. Look, comes off the 4, comes back to it. This is one of the best reversal indicators you can use. We don't even need the hikes for this. I'm telling you, if you watch the daily 4, you will have so much better time lining up your reversal trades. All right, look for the entry on a smaller time frame when you're off the daily 4. Off the daily 4. Don't use RSI and crap like that. It's garbage, dude. Garbage. Look. Comes off the 4, comes back to it. Comes off the 4, comes back to it. Comes off the 4, comes back to it. Right? Comes off the 4, comes back to it. Every time. Never mind when it comes off it big, really big, right? This one doesn't come off it that far, but look, comes off it, comes back to it. 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 It's just the way stocks move. It's such a tight EMA that it has to friggin'... It's such a tight EMA that you know, like, when it gets a gap, it comes back to it. You just got to be careful that it's not cruising right up the side of it like this. See that? Because that's not a gap. You want to be really coming off of it. So be careful with that. But that's what I use all the time, and it works amazing. Even like on pretty much, I'm trying to think what other trades. Oh, SMMT, smash that thing short. Look at this, you guys. SMMT coming up. It gets a little off it. Comes not quite back to it, but this is the day we shorted. We had 1, 2, 3, 4, 5 days in a row. We came off the friggin' 4, boom, all the way back to the 21.34. Beautiful. I covered it at the 4 and 8, but whatever. Also, Walmart, you know, a lot of trades. Just start paying attention to that. Keep it on. Look at these EMAs, guys. I don't care what stock you're talking about. 34, 34, 34. I go through a million fucking charts. Look. 21, 34, 21, 34, 21, 21, 21, 21, 21, 34. That's why I use the 3 of them together. Sometimes you get a little low, and I'll use the 50 even. Look, 21. But they give you a place to wait for a fucking... They give you a place to see where it's flagging, right? And also they give you a way to tell if you're far off them or not. It doesn't matter what stock. You could go to a million friggin' stocks, and you're going to see a lot of them trend like this. Another one that I missed this week was a perfect flag. Pissed that I missed it. Disney, look at this. Strong move up, flag off the 8. Boom, bottom tail, long. Sick. PayPal. PayPal's in a big... PayPal has a lot of room to go up. I wanted to buy that right here, but I missed it. Look at that. Breaks out of this accumulation pattern, goes up, comes back off the 21.34. Now, if this comes back to the 21 again right here, at this breakout level, see I have a price alert set, I'll be watching. See my price alerts right there already set. If this comes back to the 21.34, near this breakout retest, I'll be watching. Even though I really wish I got in there. But guys, the point is, and the best thing about these EMAs, guys, if you see a stock that's not respecting them, like right here, right here, it's respecting them pretty good, so you start to look for shorts. But now I wouldn't short it down here anyway after it's dropped that far. But when you see one that's going through them like this, dude, go to a bigger time frame and find out where it's going to. Now look. Oh, guess what? Here's the 21.34. This is the 21.34. This is the 21.34. It's going to be on some time frame. You're going to find it. Hey, look. Strong move down. Flag off the 8. Strong move down. Flag off the 8. Hey, 21.34. 21.34. I don't care what chart. You'll find it on one of the time frames. What else? What another stock that I like to trade a lot? We traded last week. Walmart. Hey, Magic. Look. 21. Easy swings with bottom tails you could have nailed. And now, guys, right? Look. A little below the 50. That tells my brain, okay, Walmart's going a little below the 50, so it's probably going to the weekly 21. And that's what I do. I say, all right. Or I just say, okay, I'll try to see if we get any bottom tails a little below the 50. Or I'll just pick a different EMA that's maybe the 70 or something, see if it's touching that perfectly. Sniff out. Look over here. 21 flag, 21 flag, 21 flag. Look, there's so many times where they just, look, 21 flag, 2134. You use these and you wait, right? Bottom tail, bottom tail, bottom tails. If you combine the bottom tails or the fake breakdown triggers near these zones, you're going to be right way more than you're going to be wrong. Look, 21, fake breakdown. Fake breakdown trigger at the 2134. Except that one was tough to get in because it's like caps up from there. But whatever, you get the idea. Right? So I would do the same thing on this Walmart as I was looking at it on the other stock. It goes through it a lot, so I put it on the weekly chart to sniff it out. And then see if I can get it cleaned up, right? See if I can find it more easier trend. But this one seems like a little, it likes to go below the 50 a lot and then reclaim. But still gave you perfect flags at the 21. And this is like most of the time what I'm looking for. I'm not just trading random setups. Most of the time I'm looking for these kind of perfect flags at my EMAs, right? I just make plenty of money just trading the perfect flags to try to trade this shit right here or that right there. Why would I do that? This is what I want to see right here, just like Disney, right? Just like Tesla, just like Disney. Oh, MSTR was another one we traded in the room, riding up the weekly EMAs. So we switch it to the daily EMAs to get in, right? Look, right here. Look at this day right here when I entered. Why? Can anyone tell me by looking at this where I would have entered? Yes, it was a little off the floor, but look at this. When you have the angle like this is the angle of a flag right here. The top of these two candles. See that angle? That's the angle of the flag. Here's the pole. And there's the flag. So we bought it right here. Boom. Huge trade. Everybody in the room could have bought that. We talked about it on the mic, live on the mic. Just perfect setup. Another one. Well, the biggest trades I think in the past couple of weeks was that. Tesla and shit. I think those were the two biggest ones because they just went beast mode back up to this resistance level. But as you can see, the flag pattern is perfect. So, anyways, guys, this video is getting way too long. I'm not a financial advisor. I just like looking at stocks. If anyone has any questions, let me know. Thanks.